Listen, what if I told you there is a company that doesn't own a single coal mine, yet it generated more than 1600 crores in revenue? Sounds impossible, right? But that's exactly what Caliber Mining and Logistics has done. And now it's bringing its IPO to the stock market. This is Caliber Mining and Logistics. But should you invest in this IPO? Let's decode everything in under 10 minutes. Your money deserves better decisions. This is Paisa Matters. Learn smart, invest smarter. Let's start from the beginning. First things first, Caliber Mining and Logistics is not a traditional mining company. It actually began as a logistic business, but here's where things changed. Instead of only transporting coal, the company expanded into contract mining. Today, it offers complete mining solutions to some of India's biggest coal companies. In simple words, the company handles everything from removing overburden, transporting it, loading railway wagons, and finally delivering it to power plants. That's why it's known as an end-to-end mining service company. And trust me, this model is one of the biggest reasons investors are paying attention. Now, here's the interesting part. Caliber doesn't actually sell coal, instead, it earns money by providing mining services. Think of it this way: Coal India owns the mine, Caliber provides the machines, manpower, and expertise. Every time a ton of coal is transported, Caliber gets paid. That's it, no commodity price risk like coal producers. Their income depends on the contract they execute. The company earns revenue from mining operations, overburden removal, transportations, railway loadings, and logistics. The more they complete, the more they earn. Now, let's talk about one of Caliber's biggest competitive advantages, its fleet. And honestly, the numbers are impressive. The company owns more than 1900 heavy machines. Why does this matter? Because owning the equipment reduces dependency on rentals and allows the company to execute large contracts efficiently. Simply put, a bigger fleet means the ability to handle bigger projects. Alright, a great story is one thing, but do the number actually support it? Let's find out. The company's revenue has grown from around 953 crores in financial year 2024 to nearly 1678 crores in financial year 2026. That's roughly a 76% jump in 2 years. Even more interesting, the mining revenue is growing much faster than logistic revenue. This shows company is successful transforming into a mining focused business. Overall, revenue, profitability, and operating performance have all moved in the right direction. Now listen carefully, because this could be the biggest reason behind all the excitement around this IPO. Caliber has an order book worth nearly 9,551 crores. Think about that for a second. That's almost 6 times its latest annual revenue. What does that means for investors? It means the company already has years of contracted work in hand, giving it strong revenue visibility for the future. And in businesses like mining, visibility is incredibly valuable. But wait, no IPO is perfect. So let's talk about the risk as well. Risk number one, customer concentration. A major portion of the company's revenue comes from just a few clients. If any large contract is delayed or cancelled, revenue could take a hit. Second is the company is heavily dependent on the coal industry. Any slowdown in coal mining or changes in government policy could impact future growth. Third is diesel price. Since heavy equipment consumes enormous amount of fuel, rising diesel cost can reduce profit margin. And finally, this is a capital intensive business. Buying and maintaining heavy machinery requires continuous investment. Now, here's the bigger picture. Despite the growth of renewable energy, India still depends heavily on coal to generate electricity. As electricity demand continues to rise, coal production also needs to increase, which means companies providing mining services could continue seeing strong demand for many years. This industry trend works in Caliber favor. So let's quickly summarize everything. On the positive side, a massive order book, strong revenue growth, government linked customers, integrated mining service, and a large owned fleet. On the other hand, customer concentration, coal sector dependency, high capital expenditure, and fluctuating diesel price remains key risks. So, as always, investors should consider both sides before making a decision. So, what's the final verdict? Based on the company's business model, financial growth, and massive order book, Caliber Mining and Logistics appears fundamentally strong. However, the final investment decision should also depend on the IPO valuation. If the price is reasonable, this could attract both listing gain seekers and long-term investors. But remember, always read the RHP and invest based on your own research. That's it, guys. Now I want to hear from you. Would you apply for the Caliber Mining and Logistics IPO? Let me know in the comment below. And if you enjoyed this detailed IPO analysis based on the actual RHP, don't forget to like this video, subscribe to the channel, and hit the bell icon so you never miss an upcoming IPO review. Thanks for watching. I will see you in the next one.